Hey everybody, welcome back to ChatArgos, our weekly chat with Jonathan Reiter, our CEO and Chief Data Scientist for ChatArgos. My name is Patrick Tan, the General Counsel for the company as well. You may have heard about us from the media. We were the ones who helped to discover that BUSD was under collateralized and that the story broke on Bloomberg. Now, we missed last week's episode. That's because I was traveling in the Bay Area, meeting a lot of new customers, a lot of new VCs, making a lot of new friends as well. But now we're back. I'm back in the studio, and we're happy to do this recording. So this week, I kind of want to talk a little bit about the stuff that we brought to light some time ago, which is this whole thing about BPEG backing.
Okay.
And I think it's something that's relevant because what we found is that some of the problems that we had identified in the early days have not been fixed. Not being fixed is one thing, but what we see is that there are companies or sort of providing attestations to say that everything is fine. This has a high level of confidence, and you should be fine with that. So specifically for those of you who may lack the context as to what we're talking about, this has to do with the trading of BPEG tokens on decentralized exchanges like PancakeSwap. So you'll be trading certain wrapped type of tokens. Presumably, okay, if you don't have the context, a wrapped token is a token that has been packaged so that it can be used on a different blockchain. So that means that the actual asset is held, supposedly held somewhere. So let's talk a little bit about that.
Yes, I think for people who are familiar with traditional finance concepts, ADRs, things like that, are like wrap tokens,
Yeah.
where you have a bunch of stuff in a trust here and then shares issued over there that sort of mirror them. So Binance runs a process like this. Lots of chains and bridges and whatever things run processes like this. So while looking around further in the Binance peg space, we found some tokens that weren't wrapped. Whatever, that's fine. This is kind of a known weren't backed properly, weren't run properly. The bigger question is you've got now people running things that look like security audits and whatnot on some of these services that tend not to do the greatest job. So we're going to try to keep this discussion news focused and not business focused, insulting competitors. That's not the purpose here. The purpose is to explain what products are. So if you've got a token that is a wrap token with no backing, it's in some sense worthless. I mean, it could be trade for some price, whatever. But if it's supposed to represent X units of some token on another chain, and either those tokens don't exist anymore, or they're not in the proper place to be backed, whatever it is, that token's kind of worthless. You can approach auditing that token, investigating, rating, whatever that token, in a couple of different ways, and it looks like people are conflating kind of economic analysis with software analysis. Right? So we've got things, people are giving very high ratings on tokens, there's no rug pull, there's no whale control, sale, taxes, whatever, stuff like that. Exactly what those words mean don't even matter, but you have projects where if you try and sell more than a certain fraction, it'll block you, where there's a tax on sales or whatever, purchasing different prices for different whitelisted accounts. Those things are security measures, right? And you can say this token doesn't have an undisclosed tax on sales, fine, but it could still be worthless. Those are not the same kind of thing. And it's not clear to me that most of the users really understand what's going on. So in this case, I was just digging around, sort of exploring both for some product documentation, competitor comparisons, use case, whatever examples. So you have exchanges on, in this case, BNB Smart Chain, but this is a general problem. I think it was PancakeSwap in the case that I posted, and they reference a rating source, and that rating source thought a lot of these tokens were A-okay. And they're, worthless unbacked tokens where, there was a renaming of the original token. There's a new version that has all the money. They're just completely vacuous, empty, worthless tokens. There's a difference between the software works in the way that it's written and no one's lying to you in the white paper.
Yeah.
And there's no value here because it's useless, right? In some sense, UST still functions properly, right? Luna Classic
it functions exactly as how it was designed to
function.
function.
The token's still transferable, right? So you're not, I'm not defending the project or whatever, but, that's not a technical problem. That's an economic problem. And there's a lot of conflating of these two things. And if you go to your whatever exchange trading swapping screen and it says, this token is great, maybe it means that you're unlikely to lose ownership of the token without advance notice in some random reallocation of resources on that project. But doesn't seem to mean, for most people, most of the time, most of these examples, that any economic analysis has occurred, which is in some sense more important. I mean, there's connections here. This is like there's a Chinese companies can't sell shares offshore. This is a very very high level version.
Yep.
So they create what are known as VIE structures, and these are supposed to be offshore parent companies that receive dividends, and they'll distribute the dividends to the offshore shareholders. China has capital controls. This is a process. And for more than a decade, lots of analysts have said these companies are worthless because their offshore shares may not ever receive the dividends. You have no rights, the onshore ownership. Whether or not any of that's true, the point is simply there's economic analysis there that is completely independent of the underlying company, right? So whether or not your offshore shareholding rights or whatever entitle you to receive the earnings, that's similar to this issue, and it's a thing that becomes more and less important for various emerging markets with capital controls. But this is a problem. We're seeing the same problems here, where people are running trusted bridges, and the question of whether the equivalent of the dividends will cross that bridge, depends on if the backing's there, if the software works, whatever. And those are a mixture of software and economic questions. People need to start to approach that together and recognize that those are the same problem.
You think one of the problems as well is because it's permissionless, right? All this stuff is permissionless. So for me to rewrap something that's already wrapped, there's nothing to stop me from doing that, and that actually allows for an infinite number of hypothecation and another kind of economic miscounting, because you double count sometimes, which is a common thing that we see sometimes. We talked about this when it comes to DAI. Like the
okay. There's two separate issues.
Yeah.
Here. So the first one is the reason all of these rating type DAOs and services and whatever exist is the first problem you're addressing. Anybody can create a token. Anybody can wrap a token, and the do your own research philosophy is of limited value if there are 50,000 tokens to research, and or you simply don't have the technical skills to do any meaningful research. Right?
Yeah.
And that's not a criticism.
Yeah.
You have to be able to read the relevant programming languages and understand that all kinds of whatever stuff. And that's challenging. And debugging code just based on reading it is famously very, very difficult. Right? This is not something that even experts will be comfortable doing. So whether or not these rating things exist so that you can say this is legit or isn't legit or whatever, it can help you sift through the fact that there's thousands of tokens. You can create your own wrap tokens. People get airdropped scam tokens all the time, right? This is and they have names that are similar to some other project. Whatever.
Yeah.
I mean, these are all well-known.
These are all well-documented, right? Well-known.
So it's not that these services aren't necessary. It's that people need to both understand what they're actually getting from these services, right? And maybe these services need to be a little more honest on that front, right? Saying we do analysis of bridge tokens and we're fantastic at analyzing bridge tokens, and then not identifying that the backing was missing on the other side of a bridge for a token that you gave a high rating is, mistakes happen, whatever. It's not a good look. That's separate to some extent from, some of these other problems.
Yeah.
Right? That's a very narrow software type thing.
Yeah.
So, yeah.
Okay, so switching up gears, and I mean, long story short, I think one of the things that the TLDR on this bit is actually one of the things that we want to highlight. One is that the BPEG, some of the shortfalls that we saw in the whole BPEG, the Binance PEG token things on the Binance Smart, the BNB Smart Chain, a lot of these problems I want to say all of these problems actually have not been fixed, but I would say a very high number of these problems have not been fixed. That aside, the thing that concerns me the most is that a lot of people, a lot of traders might be lured into a false sense of security because there is some sort of what appears to be some form of external validation from a security or an audit firm or something that looks like an audit firm but doesn't perform or purport to fill that role, is saying that all of this is good, this is fine, this is kosher. But to what extent? And what does that actually mean? Yeah. Sure, the code is fine, but it could be code that's backing, like UST, that's a good example, it has no economic value. Yeah. And this is one of the first things that when we started the company, we talked about all the time, is that, look, we have to make sure that if we're going to be trading, we don't want to be trading against an empty box because there's no money to be made there.
Yeah, I mean, these are linked issues in if you're going to do automated finance, right, you'd expect that there's an issue of finance and there's an issue of software. Those things are sort of attached together. Yeah.
I think the thing that concerns me is that most people are now they've kind of just ignored the finance bit, especially when it comes to these attestations, because I don't necessarily know that they're doing the thing that they purport to be doing, or achieving the outcome that they seek.
Yeah, okay. I mean, I guess we can throw some shade on traditional finance here for a moment. I mean, if anybody that's seen The Big Short, right? Rating agencies famously for a very long time we're not the most independent and greatest predictors of credit risk. You know, there's always been problems with people misrepresenting how deeply they're analyzing stuff that they're analyzing. I mean, there were tech analysts in the tech bubble 20 years ago that I think some actually went to jail for taking money, lying about the quality of companies, whatever. So the fact that these rating things are not perfect just means that they're run by humans and it's normal and whatever's fine.
I think,
but there's different issues here. Because if you have discussions about whether or not the SEC accepting your registration statement is approval of your business, right? It is definitely approval that the disclosures in your documents are vaguely connected to what your business is supposed to do, and you've disclosed who owns what, who deals with what, whatever. That process, coupled with reasonable market surveillance, lets you know that the company whose ticker you're trading in your whatever interactive brokers account is in fact the company that you think it is.
Yeah.
There's no fake tickers floating around on there. And that company legally has ownership rights to the IP and manufacturing facilities, whatever. That's what the whole registration disclosure process is about. Absent that, right, you end up having to do the equity research part of figuring out if the thing's worth any money, assuming it's set up in the way you think it is, and also the analysis of whether it even means what you think it does. This is a problem where people set up pink sheets, OTC, penny stock type things, with names intended to sound like other companies and run pump and dump scams. That's a 100-year-old, whatever, longer problem. That happens all over the world. Okay, right, we've just got that problem coming back in a more extreme version here. Where you can automate the scamming, which is challenging. So these are hard problems, and people are working on fixing these problems. But it's important to understand that saying this token contract is secure doesn't mean that the token's worth anything at all. And it is a completely orthogonal question.
Correct.
Whether or not the token's worth anything at all. And maybe people should, expand their horizons in those investigations a little bit.
You're absolutely right. I am inclined to agree, because just to say that, the smart contract checks out, the rest of it checks out, there is a value to that. I think something as fundamental as the backing is something that's one of the risks that's inherent in DeFi. And it's data that whilst we track quite readily, isn't it's not an automatic thing when it comes to a lot of these other services. And
I mean, you should come back to Tether, I suppose, as many of these things do. I mean, the largest thing with questionable backing is the largest thing with dollars in the whole space. So yeah, in general, people don't put that much scrutiny on there. Fine. And in cases like that where there's reasons for some opacity, maybe it's somewhat excusable. You need to kind of step back and say, if there's absolutely no reason for opacity because these are all on-chain assets, then it's kind of inexcusable. Banking stuff is challenging, and historically was a problem, and whatever. We're not making judgments on some of those things.
I think that's fair. Switching up gears a little bit, I think there were some tweets over the past week, sort of like alluding to the fact that a potential a crypto bull run is on the horizon simply because of some things that have been happening in China.
There seems to be some conflation of the Hong Kong virtual asset service provider regime that begins today. I guess it's yesterday, so it's after 5 p.m. now.
Yep.
That doesn't seem like that's really a massive allowing of retail to get involved in things.
No,
it's
I
allowing applications for institutional custody.
Yeah, correct. It's not. I didn't get the impression.
And the enforcement on that front seems to be stepping up at least as aggressively
If
as
nothing
enforcement
else,
on the North American front.
If nothing else, I think the regulations seem to be somewhat stricter than the before times.
Well, yes, it is an interesting question as to whether the mostly, I guess, Chinese and South Korean and North American regulators, investigators, are starting to understand this because they're working together, because they're exchanging information, because they're competing with each other. I mean, South Korea, whatever, but China and the U.S. are competitors in some senses here, whether they're competing to do a better job regulating this or arresting each other's participants or whatever. There seems to be an increase in the rate at which this stuff is happening.
Yeah.
They seem to be kind of moving, I'm not going to say in lockstep, I don't know that they're coordinating, but, there's people getting arrested in China and people getting charged in North America. The legal systems work differently, so those flow different directions. And that seems to be stepping up. Whether those are related, it's conceivable the Chinese are finding out information from U.S. press releases, or the U.S. is finding out information from Chinese people getting arrested. Presumably they all read the newspaper. I don't know, but it's certainly stepping up. Right, there was this minor stablecoin provider that I'd never heard of.
Yeah.
I think I read their white paper like a year ago or something, in vague memory back here. They just all disappeared. Okay. Yeah, certainly there seems to be less tolerance for some of this.
Which is why I don't necessarily know whether you could interpret that as any reason as to why there would be a bull run, simply because there is this quasi licensing regime that's in place that is supposedly supposed to increase participation.
Yeah, I mean, I guess there's the long-standing joke that, North America, Western Europe, what happens is the price goes up, it collapses, the bubble's over, and then the regulators come in and enforcement happens. Whereas in China and Asia, I think more generally, stuff kind of stumbles along, and then the company gets delisted. And this is a thing that I think even Muddy Waters has talked about on some of their podcasts and whatnot over the years. It's much more common for a stock to kind of trade along at a high number, get frozen, get suspended, and then it eventually gets just delisted at zero, right? Whereas a lot more times the regulators come in coroners. They come in after the collapse in North America, Western Europe. And there's a lot more of sort of proactive, like the bank loan didn't get paid, nobody talked about it, the company got suspended, the stock is still high, the token is still kicking, the project is still running, and it just gets frozen and disappears. Different systems, different approaches, so you may be seeing some interesting changes there. You get people in the U.S., exchanges get charged, and they fight back and forth for a long time. In other parts of the world, the people get arrested, the exchange goes offline.
Yeah.
It's a different style. No one's saying better or worse.
Well, right? TLDR, I don't think any of this can be interpreted as like bull signals.
Yeah. These are not net positive things.
None of these are net positive.
Now, whether you go through and you clear it out and then stuff goes back up, but the backlog to be cleared. It does not seem like there is a massive push to allow these things to happen in a sort of unrestricted retail environment.
Oh, I did not get that sense from any of that. Yeah, well, okay, finally, fentanyl. We saw all of this stuff about fentanyl and how Tether has been...
Yeah, so there's more and more... This is mostly out of U.S. charges where they're finding people who've been using Tether specifically in crypto payments in general, facilitating various kinds of fentanyl purchases, precursor chemicals, and just drug transit, whatever stuff. In general, I mean, this is an interesting thing that we've thought about for a long time. When the borders closed in early 2020, you start to have to think about where enough money could have come from to get injected into a lot of this stuff. So if you're thinking about retail traders, investors, whatever, in North America, they, generally speaking, had dollars in bank accounts already and could wire the money, to Kraken, certainly, Coinbase at that time wouldn't have been a problem. You remember, it was, for a period there, it was relatively easy to get actual dollars onto exchanges. It got harder subsequently, post-FTX, maybe impossible. But it was not a real problem. And it's not clear why a whole bunch of traders there would really want to use Tether. There were discussions about how you had to use Tether to access the offshore exchanges and the rest of it. And sure, that's certainly some of it. But, a simpler explanation may also be that it's associated with a lot of cross-border businesses where they couldn't move the dollars across the border anymore because, COVID restrictions were such that nobody was shipping stuff.
Yeah.
And I guess if you have a choice between shipping your, I'll say, product, because, goods stuff was still traveling.
Yes.
Shipments were still happening, but people weren't traveling. And, we're not in the distribution of those kinds of products businesses, but I would imagine you're far more likely to send containers full of industrial chemicals than you are full of dollars. And you'd find a way to get the dollars in a bank somewhere and pay a fee or whatever. You deposit dollars somehow. We've all seen American Gangster, whatever. That kind of stuff. So it's always seemed like that was probably coming to some level. Now that that's starting to come out, you have to wonder how quickly the Band-Aid gets ripped off and how deeply some of that stuff starts to go. There are real political questions there, I think, as far as policy is concerned, in that, whether you think the SEC is right or wrong, these are ultimately political decisions and rules can be changed, and, the U.S. Congress or whoever can, depending on the country, can write new rules and change the regulations and give people exemptions. All that stuff is legally possible. And the more out-of-bounds behavior is found, the harder and harder it's going to be for anybody to support that because, again, we talked about this like a month ago, politicians' jobs to get reelected.
Yeah.
And supporting that is not going to get you reelected. So those stories may not mean much, I think, to the end investor, but I think they do have a lot of implications at a higher level because the last thing any U.S. representative, senator running for re-election in the Midwest wants is for their opponent to be able to say, you're supporting products that help, people shipping drugs and people and various foreign countries that they don't like. That's not going to get you a lot of votes in much of anywhere, really.
I mean, that Tether and crypto in general, but Tether specifically, was the main carriage vehicle of choice to pay for fentanyl and fentanyl precursors and base materials and other stuff. With respect to this particular drug trade, does not really come as a surprise to me. We've talked about this for a long time,
and that's the stable coin that the government has chosen to name specifically, right? Well, so there you go, right? That's not. I
think if we looked at some of those on-chain flows as well, I think that's quite consistent.
I suppose. I mean, I guess the basic concept there is you think if these are dollars that can't come back out because the people who ultimately need the money don't want actual dollars that they're looking for, and they don't have access to their own bank accounts. Whereas you see a lot more recycling of USDC. I mean, famously, Tether doesn't get withdrawn much. Right? There's not much.
No, and I had a conversation about this with somebody else, and one of the things was that they were saying that where's this demand for USDT, whether the market cap increases or decreases. However you want to calculate those numbers, think about it as like a revolving door. Just as you're on your way out, somebody else is on their way in. So you can always hand off.
Yeah, I mean, we've looked at this a little bit. So what you see is a steady decrease in the total amount of dollars in the ecosystem, going back, a couple $1 billion a month, going back for basically to FTX at this point.
Yeah.
And the balance of what remains is shifting more and more heavily into Tether, to some extent into the true dollar. We can talk about that one in a second. But there's still a net withdrawal.
Yeah.
What that means, if the fraction of dollars that are in Tether is going up and the overall fraction is dropping, is that in not that long it's going to be essentially all Tether. Right. I mean, a long time ago, people talked about how the whole ecosystem was run by Tether. Fine. Whether or not that's true, that was the thing people said. And then at peak 2021, the size of USDC and USDT was pretty much the same. Not the same at all anymore. Right. There's more Tether on both Ethereum and Tron than the total amount of USDC by a significant margin. And the market is moving that way. So whoever it is that wants those dollars there, whatever use cases they are, I mean, some fraction of all money is used for bad stuff, so whatever. The question is whether it's a large fraction or an outsized example, and that's starting to become a bit riskier. To touch on the true dollar again for a second, is the other growing one. They've now announced officially that they're moving offshore out of the U.S. They've transferred control of the thing out of the U.S., and even the documents are now signed by this person who supposedly bought it that nobody's ever seen.
Yeah.
It's not the guy who's based in the U.S. He used to sign things for a long time. So that seems to be a fully offshore product now as well, whatever's really going on there. It is interesting to see. But, more and more indictments like that are going to make it harder and harder for people to do permissionless.
I mean, I think we saw on the SIVB weekend or the Signature Bank weekend as well, specifically the Signature Bank weekend, when we saw, and we covered this and it was in Bloomberg as well, when we saw about $1 billion spirited out of the US into Capital Union, then obviously now we don't really know where any of that stuff went.
And there's still supposedly a couple $1 billion that have been returned. We don't have details.
We don't have details because the attestations disappeared. But at the time...
Oh, no, I mean the government has said exactly what balances.
Yeah. So we were tracking all of this stuff, and we saw it. So this was always going to happen. I mean, in many ways, it already happened. It's just that now they've just made it official. Yeah.
And some of the comments about what stuff was spotted in there, it feels like the investigations of those bank closures, or the process that led up to those bank closures, or something related to those bank closures. The request for Silvergate to shut down, right?
Yeah.
You're starting to get a sense for what conduct was found and decided to stop things. The U.S. is okay with some offshore banking, but they're not okay with sanctions and drugs and that kind of stuff. And you're seeing more and more of that come out, which is going to probably get worse before it gets better. Because the quantums mentioned in these filings are still pretty small.
I'm not even sure we are at the beginning of the end yet. Yeah, it's still early days.
Yeah, okay, that's a Churchill question, right? Was the closure of those banks the end of the beginning or the beginning of the end? But anyway.
All right. We'll see. Well, that's all we have the time for this week. Thank you very much for joining us. And if you like the content, please hit that like button and always remember to subscribe. If there's anything that you disagree with or there are things that you want us to talk about in the next episode, please hit us up on the comment section down below. Thank you for taking the time out to watch the show. It's always a pleasure to have you on board. And we'll see you again next week. Till then, bye-bye.